reducing the group's debt. And for JSW Energy, the question is, it's taking on a significant amount at a time when the power demand is so low. So what is it going to do to its balance?
Should we understand it's an enterprise value of 9,700 crore rupees, but exactly how much money does Jaiprakash Power get for this, and to what extent will the debt be reduced? I guess there will be a net figure. What this one says is that the sale has been concluded at an enterprise value of 9,700 crores, including inter alia 300 crores, which is payable upon receipt of certain consents and approvals. So another, if you net it out, it's 9,400 crore, and the 300 crore will come only when the other consents have come in. And then we have to get an idea of, how much of this money actually goes to the JP group, or whether a bit of debt is netted out and the balance goes. So we just have to wait for those.
But it doesn't matter, right? If it's
no, it doesn't matter. It's either cash or it is debt. Exactly.
So net, it will be a benefit of 9,700 crore to the JP Power, at least to its debt, whatever the breakup is of secondary importance. And secondly, they've also signed that binding MOU for sale of that Bina thermal, which reports were suggesting is another enterprise value of close to about 3,500 crore, I think is what Varinder was telling us earlier. So net, if both go through, it would be close to about 13,000 crore.
Absolutely. So that would sizably reduce JP Power's debt. As well, I guess a lot of relief for ICICI. ICICI is a company, and IDBI. These are the banks that have a lot of exposure. I would assume SBI as well are the companies that have exposure to the Jaiprakash group. There would be plenty of banks, but these are among the more prominent banks that have an exposure. So let's pull up ICICI, IDBI, SBI. Those are the other stocks that will benefit now that the transaction is done. It was always expected, but with the transaction being done, there's IDBI. I think their exposure to JP Power must be higher, and that's why you have that sharp uptick coming in IDBI. One should also perhaps pull up SBI. It's bound to have some bit, but it is IDBI and ICICI which have investments. And post this divestment, Jaiprakash Power now owns the 400 megawatt Vishnu Prayag unit, and of course that 500 megawatt Bina continues to be part of their portfolio, though of course they are likely to sell that one as well. And then of course the Nigri plant is still with them. These are the plants that is still left with them, as well the 1980 megawatt Bara thermal power plant. So these are the plants that are still left. There would be of course an impact on sales and revenues as well, but at the moment the big advantage or the big positive for JP Power is a huge, hefty reduction in the debt of that company. Major transaction.
One clarification, I think this news of sale of Baspa as well as Karcham Wangdo had come through in November of last year, Lata. So at that time, the two groups, JP as well as JSW Energy, had signed a definitive agreement to sell Baspa as well as Karcham Wangdo. So this news was known by the market. What's happened right now, I believe, is just the conclusion of that. So now money will flow through because the deal has been transacted. But this is something which is known to the market. What comes in is fresh news, is that Bina is, there's another step towards sale of Bina, of which we do not know the size, because 9,700 crore for the earlier transaction of Baspa 2 as well as the Karcham Wangdo was known by the market. The sale has been concluded. The fresh news is that the two groups have have signed a mutually binding agreement to transact that, which means basically JP Group will sell it and JSW Energy will be the buyer. JSW Energy, I think, is one of the least indebted companies, at least in the sector. As of March, it had a debt of a little more than 8,000 crores.
Okay, maybe you want to pull up JSW Energy in any case as the buyer. A buyer in distress usually gets a thumbs up from the market, and that's what it's getting at this point in time. It's almost a 10% gain for JSW Energy, despite being the one who is shelling out the money. That's simply because they have been able to get it probably at distressed valuations. Murtaza Arsiwala, the analyst at Kotak Institutional Equities, is joining us. Murtaza, if you have the press release before you, the first one is a conclusion of a deal that was entered into in November, the 9,700 crore deal, whereby the Himachal Baspa power company was sold. Now we understand that an MOU has been signed for a 100% stake in the Bina thermal power plant as well. Your thoughts for JP Power itself, how much does it reduce its debt?
Well, essentially for JP Power, when you look at it, the 97 billion which the first transactions went through, so assuming it takes over some amount of debt, so that's pretty much the asset consideration is what you should consider that the debt is reduced by, because even the equity which goes in, possibly in the form of cash, could be used to pay down the debt. And the second transaction, I mean, the market speculated number is more around 3,500 crore is what they're talking of. Now, there was a section of the street which believed that the thermal plant, because it comes with more issues, versus the hydro plant, which is more like annuity, which would come in possibly at a steep discount to the capital cost, which does not seem to be the case at the 3,500 crore sort of valuation.
But it's not been, that 3,500 crore has not been confirmed by the press release just yet.
It's not.
So your assumption is that it would be a little less than that?
Well, that was the market's expectation, was that the coal-based plant, given the issues around availability or around sale arrangements, etc., which is where Bina is, that it would come at a discount to replacement cost. If 3,500 crore, which is what one of the media houses were carrying, would be true, then it would be sort of not at a discount to replacement cost.
Okay. What would the JP Power Ventures revenues and margins look like with the sale, with the conclusion of sale of these two, and if Bina thermal plant is also eventually sold? Post these divestments, what would the the revenues and margins look like?
So given that the hydro plants, if one were to look at, in a power company especially, we don't look so much on hydro plants, we don't look at the margins, but nonetheless, hydro plants are high margin sort of businesses because there is no real cost above the EBITDA line. In that sense, there would be, a fair amount of the certainty of earnings for JP Power Ventures would go away post the asset sale of the hydro plants. What would remain is one more hydro plant would remain with JP Power. And then you would have thermal plants where, they haven't still been operationalized. From a margin perspective, a coal-based plant would be fairly margins dilutive, though, just reminding once again that that's not something that's a focal point for us. But the coal plants, essentially, the profitability is not so certain as of now, given the fuel sourcing and the sale arrangements are not as clear. And so it would be hard to put a number to the revenue and EBITDA that would eventually materialize from these.
So basically one hydro asset and a few coal-based plants which is still being implemented by the group.
That's right.
Okay. What's your sense of JSW's debt position? It doesn't get difficult because of all these purchases.
Well, if they have tall ambitions, as they have stated in their previous releases, if there is going to be a point. So they started off the year with a comfortable position. Maybe the hydro plants would be comfortably absorbed. They would obviously increase the leverage levels for the company. Incremental acquisitions beyond the hydro plant, be it Bina, there was also an MOU that JSW did sign with the Monet Group previously. So if these assets were to be acquired, it would come at the risk of possibly further equity dilution as well, given that the leverage ratios would not stay as comfortable if they were to consume all of these asset acquisitions that are being talked about.
Okay. Murtaza, what would be the debt of JP Group now post these two sales? Let's assume even Bina Thermal gets sold at an enterprise value of 3,500 as is being reported in the media. And secondly, do they still have any assets to go ahead and reduce debt going forward? And would the debt then be comfortable enough for Anna?
Yeah, and would they have enough revenue generating assets to service the remaining debt?
So the peak debt, if my memory does not fail me, the peak debt numbers at the gross level were more closer to 65,000-70,000 odd crores. Asset sales so far aggregated about 20 odd, so you're looking at numbers closer to the 50-55,000 crore debt levels. They continue selling. The problem that arises, like we talked in the case of JPVL, most of the assets, so the hydro assets were sort of cash cows in the sense that they were recurring cash flow assets. The thermal assets still have to prove their mental in terms of generation as well as operating cash flows. So you do come in a sort of a little tricky situation where the debt levels, while not as high, they have come off post all of these asset sales, but they still need to be serviced, and the operating cash flows for the remaining assets, you still have to see them sort of coming through because they're still in the early stages of sort of commissioning.
So this 45,000 or 50,000 crore of debt minus the 20,000 crore of reduction includes this 9,700 crore of Bina as well as Karcham Banglo, or that's over and above?
No, that's not over and above. So the 50,000 crore is after the reduction.
Okay. So that's still a substantial amount of debt, right, for a company which has very few assets left?
Well, they still do have a fair amount of assets left. The problem is that the assets left, so you're selling a lot of operational assets. For instance, you're selling off the hydro plants, which are sort of operational cash cows. You sold off some of the operational assets in the cement business. So you still have a fair amount of assets, but they're not sort of, either they're not operational or they're in the early stages of them, so they're sort of still ramping up. And that's the tricky part, that the residual debt does have assets backing them up, but it may not have the necessary operating cash flows, at least immediately, and that may put yourself in a little bit more of a tight corner as far as Jayaprakash goes.
But real estate is still available, right? After that environment clearance at Okla, there is that money that's still left. That would be what, 3,000 crore?
Yeah, so don't look specifically at the real estate piece out there, but nonetheless, there are several assets that are available. So that there is a lot of land available within Jayaprakash, within JP Infotech as well. So they may, I mean, if they are able to monetize more assets, maybe they can further reduce debt. But if one looks in, from an interest coverage or a coverage ratio perspective, then the EBITDA immediately may not be as forthcoming. That's the limited point.
Would you change your view on JSW Energy per se, any rating or estimates?
So we currently have a sell rating. Of course, the stocks come off March, and then there's been this little rally that's happening today. We may revisit our stance, but there are several sort of moving parts in terms of potential asset acquisitions, depreciating currency, etc. So we may have to look at all of the moving parts before we take a stance on that.
All right, Murtaza, thank you very much for joining us. But maybe you want to stay on and listen to our next guest, who's perhaps best placed to speak to us. Mr. R.K. Bansal, the Executive Director at IDBI Bank, has joined us. Mr. Bansal, good afternoon. We've just got this press release from Jayaprakash Power Ventures saying that they've completed the sale of Baspa Power for an enterprise value of 9,700, not news to you, and that an MOU has been signed with JSW Energy for selling the 500 megawatt Bina thermal power plant. How much does that reduce Jayaprakash Power's debt, you think?
See, basically, we have to look into the overall group debt reduction strategy. I'm not really fully aware about how much debt in JPVL would go down. They have been trying to sell in JPVL the 2 hydro projects, which you are aware that they sold it to JSW.
Yes.
And keeping in with the cement plant sale to Ultratech and other, basically
Yes.
an Ultratech only.
Yeah.
So the overall strategy is to reduce the debt in the company and in the group overall. So, and you need to also see that perhaps the projects which they are selling, they should give them equity component. Otherwise, if it is going only for debt, then it doesn't help the group overall.
Okay, we don't as yet have that breakup. Would you know?
No, I'm not aware fully. I'm just seeing the details actually on your screen only.
Okay.
But I'm aware that 2 hydro projects will give them equity component substantially.
Okay.
Equity, when I'm talking about, the money will come back to the group.
What is your own exposure? Is it to JPVL or is it to the to associate companies?
We have exposure to all 3, in the sense JP Infra, Jayaprakash Associate and JPVL.
Okay. What will be the, can you quantify the exposure for us?
Certainly the exposure will go down in JPVL. So that is, and whosoever is buying, the exposure will shift there. Similarly in hydro projects. And in cement, of course, though the debt is there, but then cement debt doesn't, normally Ultratech will not take the debt, so it will just get repaid.
Okay. What is your exposure to? Is it maximum to JPVL or to infra or to JPA?
We have to all three. More is to JP Infra.
Okay, but that one doesn't benefit from this transaction.
Not directly. It benefits indirectly in the sense that whatever money comes to the group, the group can take care of the some debt reduction strategy or some of the overdues, etc.
Okay. And who would be the biggest banker to JPVL? Is that ICICI?
I think I'm not fully remembering immediately, but ICICI is having, I think, more, plus IDBI is there and SBI, etc. are there.
Okay.
When is the next repayment of debt from the JP Group to you due, sir?
Keeps on becoming due every month, something.
Okay. And all of them are standard loans, all the three companies?
Yes.
Okay. And are they in SMA 1 or 2? Would you worry about the next transaction?
As of now, they are all standard.
Okay. When do you expect the Bina transaction to be completed?
Bina, I think, may take some more time, but it will get completed. I think it's only a due diligence process has started.
Okay. We heard about a figure of 3,500 crore as the enterprise value. Can you confirm that?
No, I'm not really aware about the valuation part. We also come to know later on.
Okay. Are you aware, sir, that after the sale of Bina thermal plant, the JP Group is still pursuing other asset sales?
Depends on their overall requirement, but they're thinking of some cement plants, etc.
Any more of the power plants, Mr. Bansal?
I'm not aware. Better you can talk to Mr. Gaur.
All right, Mr. Bansal, thank you very much for joining us with those details. Okay, so perhaps it's not IDBI as much as ICICI probably, which has a bigger exposure to JPVL. But all three banks, SBI, ICICI and IDBI, do have exposure. Maybe the slightly larger exposure is to ICICI. Well, that's the details we have on the transaction so far. The press release is, of course, out on the exchange, but we still have only guesses about what might be the enterprise value of the Bina thermal power plant, which JSW Energy is looking to buy. That would, of course, be material to assessing how much of debt JPVL will lose or reduce and how much JSW will gain. We'll wrap up this extended halftime report, Business Lunch, in a minute.